Hello and welcome to an introduction to technical analysis, Module 2, Topic 3, Role Reversing. My name is Jonathan Rom, and in this module, in this topic, we are going to be covering the different effects that a support level will have once it's broken or a resistance level once broken. So let's get started. Let's talk about a role reversal of a support level becoming a resistance level. So again, going to the psychology of the creation of support and resistance levels, we need to understand that the market participants are made up of three basic categories: your buyers, your sellers, and the uncommitted. So in this particular hypothetical situation, a market has been moving along this given black line, and where supply materialized on the top last peak, supply continued to materialize to break that black line. Now remember, at that black line, the three categories of participants were all resorted to buy on that line. The fact is that supply continued to materialize and dried up all those buyers, hence that line broke. Now, all of a sudden, things are a little different. Where everyone was resorted to buy on that particular support level, all market participants, at now where the market is now, are sitting on the wrong side of the market. They're all sitting in a lost position. And their thought process, as you are well aware of right now, is that they want to try and get out at a break-even or as close to a break-even as possible. So they are thinking to themselves, "Cheers, I've missed this. I'm sitting on the wrong side of this market. I really hope that the market can reverse back up where I bought my market or bought my stock in order for me to have an opportunity to offset my buy position and therefore not take a loss in the market." So what happens is the market reverses back up, moves back to that same level where they originally bought it at, and now their thinking is, great, this is exactly what we wanted. This is the time for us to sell the market. Therefore, a broken support level will become a new resistance level where selling pressure will overcome buying pressure for just the reason as just explained. Support becomes resistance levels. Very important not to rub out or not to delete your previous support levels, because those levels will become important for future price movements. Now we can talk about a resistance level becoming a support level, and it's the same psychology. The only difference over here is that where people wanted to sell, where people were resorted to sell, those three categories of participants, demand obviously overtook supply or dried up all the sellers and pushed the market through that particular resistance level. Now everyone is sitting on the wrong side of that market. All the people that had previously sold at that support, at that resistance level, are now sitting on the wrong side of that market and would like to try and get out at a break-even point. They really hope that the market provides them with this opportunity, so they will wait for the opportunity for the market to move back down to its new support level, old resistance level, for them to reverse that order from becoming a sell order to a buy order. Resistance now becomes support. So to show you from a picture perspective, you can see very clearly over here on the ALSI index on the Johannesburg Stock Exchange that during the months of May, June, July, and August, there was a distinct resistance level that was present. This level broke in September of 2014. Now, we don't delete that line because that line is going to be important going forward. And as we can see by the action of the market, where the market moved back towards that old resistance level, now new support level in that market. So we can gain confidence that this is now a support level, and instead of us looking at selling at that particular level, we are now looking to buy at that particular level. Again, there are four factors that enhance the strength of these support and resistance levels, these role reversals, and I'm sure by now you're well aware of these factors, remembering, of course, it's the time frame that is used, the volume that we can see, the number of touches or the number of tests that a particular price has on a particular line, and of course the activity or the urgency of particular buyers and sellers. So what I'm going to show you now is to talk about the strategies, just using simple trend lines, and what one must be cognizant of when utilizing these particular lines. We need to understand that we are looking at a top-down approach. So we need to get the major support levels, the long-term support levels, and the long-term resistance levels. This will enable us to see where the major sellers and the major buyers are coming into that market. We can then break it down into a shorter time frame, which is then known as the intermediate support levels and the intermediate resistance levels. And then, of course, to derive our market timing, we will look at the very shorter term trends on a daily picture or over a 3-month period or over a 6-week period. We need to plan our trade. What is going to get us to buy that market? What's going to get us to pull the trigger to buy or to sell? How much are we risking? And we will deal with risk and stop losses in subsequent modules. But for now, we need to understand just what are you risking before you go into that market? What is your potential reward from taking that particular risk? And then, of course, we need to execute our trade, have the courage of our convictions, have the belief in our analysis of that particular support and resistance levels in order for us to execute. So what I'd like to show you now is to actually have a look at a couple of examples for the next 3 slides on how do we break it down from a long-term chart into a very short-term chart. So again, talking about or showing you the All-Share Index of the Johannesburg Stock Exchange, we get our bigger picture. We get our major support line and we get our major resistance lines. Now, what you will notice over here is quite an uncanny ability for these trend lines to actually fit in parallel trends, and that's one of the great abilities as far as prices are concerned. Prices trade in parallel lines. So, in order for us to derive this, whether we're drawing support lines or resistance lines, it's just create a parallel line and do the opposite to where that support line was or where that resistance line is. So we've now understood where our major support levels are for the All-Share Index. We can then break it down into a shorter term view, which is an intermediate view. Where about, and that is shown on that black line. So right now we can see that prices have just bounced off. Currently in Q4 of 2014, the major support line as well as the intermediate support line. So that's giving me a great indication of the strength of that particular support level. Now when we're looking for an entry point or a market timing, we can break it down into a very short-term picture. We can actually only really have to look at the last couple of weeks. And we can see by that purple line that there's a strong resistance level from a short-term perspective, and what's going to get me to buy this market is I want the confidence that prices are going to break through that resistance level in order to indicate that prices would like to continue moving upwards. But there's enough indication from the from the long-term support level, the red line, the medium-term support line, which is the black line, and now we just need to have the break of that short-term resistance line in order to provide us with that buy signal. Thank you very much for listening to topic 3 of module 2, Introduction to Technical Analysis.